good day everyone, it's Chapman Zai here, coming back with another video, coming back with another banner. Please make sure that you hit that subscribe button, please make sure that you press that notification bell, make sure that you share the video to your friends and tell your friends to tell their friends that it's happening here. Today we're coming with a very special video where we're going to be having a trading session, taking it from scratch, where we're dealing with theoretical part of it, explaining everything that happens from the history of the market until to the current market price, so you can understand very well what is it that we are dealing about. Right now you don't have an idea. Right now you are still sinking in the sink, under the sink. You don't even know what is happening. You don't understand what is it that we're always analyzing in the market. But today we have a very special video for you guys where we're going to be having a trading sessions with our two students that we're going to be taking them through our theoretical part of trading till the practical part of it. So this video is going to be separated into two parts. We're going to be having part one, we're going to be having a part two, and the part three. Part one, that's where we're going to be not analyzing the market, sorry. On part one, that's where we're going to be explaining Forex in theoretically, dealing with Forex theoretically. That's going to be a theoretical part of it. Part two, that's where we're going to be diving deep into the Forex market, dealing with the technical part of it, understanding whatever that we've been dealing with on paper, taking it straight to the computer, taking it straight to the system, and understanding how does those tools that we've been explaining on the theory, how do they work, how do you apply them, how do you apply discipline, how to apply patience, how to apply proper risk management. That's how the theory is going to help us. The theory is going to be explaining everything, market patterns, market candlesticks, and everything, the trend lines, the horizontal range. How do we apply those tools, those trading tools into our system? The part three of the video, that's where we're going to be diving deep into showing you how you can analyze using your cell phone, because obviously not everyone is having a laptop or a desktop where you can analyze the market the way we do. Some other people, they only have their cell phone since they are starting. I started having the cell phone. So we're going to be diving deep on our last part of which is going to be part three of this video. We're going to be showing you everything, how to use your cell phone into analyzing the market, taking the trades, understanding the candlesticks, understanding the patterns, understanding the time frames, understanding lot size, opening of the position, closing of the position, the running profit, balance, equity, margin, free margin, and everything. So everything is going to be covered. Please make sure that you hit the subscribe button. Please make sure that you hit that notification bell so that next time we drop another video, you get notified. Please share the videos to your friends, leave your comments below so that we will be encouraged into making another video very informative. So please make sure you stick with us until the end of the video. Make sure you watch the video until the end. We have more patterns among market patterns. All the time, every day, every minute, every second, the market moves in pattern. There is no way you can see a market moves in a different form without creating a pattern. So there's this thing which Forex has been here for a long period of time, and this is history. So the history repeats itself. Whatever the market did before last year, it is still going to do the same thing even this year. So if maybe, let's say our student maybe or from the school was going to cram the market, because each and every time the market repeats one the same thing. It's just that sometimes we fail to understand what is it exactly that is going to do. Secondly, we have a fear, what if it does not repeat the same pattern? You understand? But that comes with confidence. If now you've developed yourself a confidence to say, now I know when the market gets to this point, it will buy. I know when the market gets to this point, you will sell. You understand? Because it's not like you are just creating this thing out of your own mind. Now I'm guessing now the market is going to buy. I'm guessing the market is going to. You anticipate based on what you see on the market. So usually we have bigger patterns that create a reversal or that changes the direction of the market. We call those reversal patterns. Obviously, like you cannot unfollow the trend. For example, if there is a strike that goes to Etonville, you're coming from Benoni, you want to go to Etonville, there is a strike that is coming from Etonville to Benoni. You cannot pass those people and oppose their direction and go, they will harm you. What you need to do in order for you to win, join those people and come with them to Benoni. Because what will happen if they see you go to a different direction? Same thing as the market. If you see that now the direction of the market is going up, you need to join buyers. If you see okay, fine, now the market is creating or is forming a sell structure, is creating a reversal pattern, just know what reversal pattern is that. It's changing from being bullish to being bearish, or it's changing from being bearish to being bullish. If now the market is changing to being bullish, just join the trend. But now the tricky part is, do you know when is the right time to join the trend? You understand? Because everyone can understand the market patterns, trust me, but we fail to understand when is the right time to join the trend. When is the right time to place my buying positions? Because trust me, with Forex, no one will ever have enough capital to risk in order for you to sustain whatever reversal that is going to happen. You can have a certain account, maybe 1,000 rand, or let's say 10,000 account, and the market can wipe everything there. That 10,000 in less than a second, the market can wipe everything because you are failing to use the proper risk management. Secondly, you are failing to enter at the right spot. Because before you can enter a buy, do you still remember this pattern that we talk about? You can enter a buy here. Let's leave this if I stop. You can enter a buy here and go up. But only to find out now as the market was here, you see okay, fine. The direction of the market is what? Is bullish. So you need to do what? You need to buy. But now the tricky part, you don't understand when can I enter. You enter your buy positions here, then the market retraces back. It takes you out before it goes to your direction, and you're gonna headache, man. What is it that am I going to do? Because now your account is wiped. The reason why your account is wiped, one, you did not do your proper research to enter the market at the right spot. Secondly, your account is very young and you risked it all. So to be on the safe side, understand the market patterns first. After understanding the market patterns, know when is the right time to join the trend. You understand? Because I can give you a pattern, go to okay, fine. You know what, but this is an uptrend. Because everyone can see that this is an uptrend. But now, since this is an uptrend, remember, not every move in the market belongs to you. Since this is an uptrend, where can you buy this market to make money? We need to join the trend. You don't have to work against the trend. You cannot sell this market because you can see the market is buying. If ever you want to take sell positions, you will be losing your money. So in order for me to buy at a proper entry, where can I buy? If you don't understand, make it clear. I will clear it. Where can I buy?
Since trend.
It's an uptrend.
It's an uptrend. So it depends what let's say the market in which will you go. Izothi maybe njengoba beyihamba la. Yeah. At some point mayihamba ishiya okay, I think maybe ngingabhaya mina.
Why?
Because iqalela it's good. Uyihambile uptrend bese mayicedela ikhuphuka mayibreaka. It has to, or maybe break it has to retest.
Okay, let me tell you something. You're not wrong, eh?
Yeah.
You're not wrong, but that also depends with the level of experience, eh?
Okay.
And that also depends with the people you meet.
Mm-hmm.
It's not good. I know everything. You understand? But I understand it better than I understood last year.
Mm-hmm.
You understand? So now this is what I want to make it clear to you, like from onset. The market is on an uptrend, right?
Mm-hmm.
Now you realize, hey, the market is going up. The market started here.
Mm-hmm.
The market is busy building candlesticks. It shows a bullish direction.
Mm-hmm.
Now you caught the market while it's here. Are you going to buy it?
No. Why?
Until lapho sungasakhombisi ama-loss bathi nama-wiki what.
You're correct. Let me tell you something. As the market moves up, I said not every move in the market belongs to you. You just have to know what it means. Now what belongs to me is this. As the market is moving up, you find the market here. Like you find the market here. You say, the market is going up, let me buy it. No, you are totally wrong because you haven't seen any pattern. The market hasn't yet given you any pattern. I said the market moves in pattern.
Yeah.
The market hasn't given you any pattern. You buy here, the market goes up, it gives you a little yana profit, it goes down.
Yeah.
It blows you out.
Yeah.
Before it takes your direction. So what you need to do, you need to wait for the retracement because now there are traders, retail traders who are going to say, you know what? It's in the middle of the trend. Let me just join the trend. And you know what is going to do? What is going to happen? There's this thing that we call a liquidity sweep. There's an era of a liquidity provider here where a lot of retail traders are trapped. Now the institutional trading is going to say, okay, you know what? Since they all bought here, let's bring back the price to come and collect all those orders before we go up. So where you need to buy, there is going to be, we're still going to go to that part. There is going to be a fair value gap. I talked about the fair value gap last time. There is going to be a fair value gap where the market is going to indicate, I'm going to come to this fair value gap to collect all these orders before going up. You just need to wait for that fair value gap to present itself to you. Then you can ride from here and go up with the trend because there is no way it can change the direction, not unless you did not do your proper analysis. But all I'm trying to say is, don't just be happy by seeing the market going to an upper direction and say, let me ride the trend. Wait for the pattern to form first. Then you enter at the right time, at the right spot, with the right pattern. Right now, we call this a retracement. Who wants to be taken out by a retracement? No one, because it's going to be very painful because the market is going to show you profit and retrace and take you out on this retracement and go up. So to be on the safe side, you better wait for the opportunity to present itself to you. Don't present your trade to the market without a value confirmation. I'm not sure if it's clear. Just after the retracement, I'm going to show you what are fair value gaps. What are liquidity providers? How do you see a liquidity provider? Last time I told you, what do you call this whole pattern? So it's fine. This is a step and ladder. There is a different way we trade a step and ladder, but we're still going to do that because the market is live. We're going to be dealing with it every day. let's do our market pattern. Let's do our market pattern. So on our market pattern, we have a consolidation pattern. This is a consolidation pattern. This is a consolidation pattern. What does this mean? It's here now. It's a consolidation pattern. It goes sideways from the left to the right. Does it show you? Does it show you any direction?
No.
It does not show you any direction because it's consolidating. The market is moving sideways. Are you going to tell me that every time the market gets here, I'm going to buy?
No.
Then take out here. Every time the market here, I'm going to buy. No. It does not work like that. Do you know how long is this going to last? You don't know. How can you know? I'm going to tell you. How can you know that this is the end of the consolidation pattern?
When you break.
Exactly. I'm going to show you. This is a consolidation panel. You don't want to trade such things like this. You might be lucky if you're lucky, but we don't make it lucky. This is a consolidation panel. How to trade a consolidation panel channel? How to see the end of the pattern. The answer is breakout confirmation. The answer is a breakout confirmation. Now you don't know what is it that am I going to do in such cases like this, because you will see the market moving up and down, and you will come with your indicators, put a supply and a demand. Okay, it's fine. It's a supply and a demand. But now I will come and see, okay, fine, the market is moving up, down, up, down, up, down. Okay. How am I going to know that now the market is changing the pattern? The market is going to break this supply. After breaking it, you don't ride it. Because trust me, before the market breaks this, it is going to create the fair value gap somewhere here. You're going to come to the fair value gap thing. The market is going to create a fair value gap somewhere here in the middle. And you know what a lot of traders will do? Immediately the market comes here, they will sell it. And the market is going to come here and give you a fake out before. We call this a liquidity, an area of liquidity. We call this an area of liquidity. This is an area of liquidity because the market has broken out of the structure and came and retested the price and fake you out. You don't need to sell it, trust me. You don't need to sell it. Just wait for it to present the right price for you. Because now, the institutions, they know about it. This is what the retail traders are going to do. Immediately the market breaks out of the structure. They will wait for the retailers and make money. But now, because they don't want you, they want their money here. The market is going to come back, trust me, it's going to come back and respect this fair value gap here. Already it has taken out all the retail traders that were here. It has already taken out all the retail traders that were here. They are already taken out with their stop loss. Then the market is going to move down very peacefully. Now you see this thing is answering the same question that I was asking. Well, I did not write it down. Oh, the same question that I was asking you.
Yeah.
Where are you going to enter? You need to understand the market structure. You need to understand the psychology of the market. You need to understand the language that the institutions trade. Because only understanding the language of the retail traders, yes, you're going to make money, but how long are you going to last? You are going to make money, it's fine, and aside, you are going to make money, but how long are you going to last? For a shorter period of time. Because like the retail, the institutional trading, I'm a bank, they're going to come big and collect all the orders because you're going to be placing your positions and your stop loss here. You don't know this thing, the fair value gap. You don't know it. They're going to come back for it. That is where now I create the cheap price and the expensive price. Do you still remember it? The one that I was showing you with the yellow shaded line, the black line in the middle. The high price and the discounted price. It's yes, I can buy it, but now it's still an expensive price. I must wait for it to come below the black line so that I will get it on a discounted price. Then I will buy it to market. Did it ever come back? It never. From that point, it shooted up. As I was showing you, like now I'm surprised with how did the market make this move.
Yeah.
So okay, fine. The bottom line here, we say this is how we trade the consolidation pattern. We said this is a market reversal. This is how we trade the consolidation pattern. Now we move to okay. Now the question is answered. How am I going to know whether to buy or to sell?
Yeah.
Now we move to a market that is moving like this. Obviously, you're going to be coming with your tools up and down. This is an uptrend. Now, still the same questions arise again. How are you going to place your position if the market is moving in this direction? I'm going to be selling.
Oh, I know what you said.
You're going to be buying, but where are you going to be buying? Where? This is an uptrend. The market is moving in an upward direction. How are we going to be buying the market? How are you going to be buying it? Tell me. It's simple. I'm not sure. I'm asking a question that I need to answer. It's simple, I'm going to answer it. On patterns like this, you have to be extra careful. You have to be extra careful. These are the things that we have. We have a horizontal line or a support. This is where you're going to be placing your supply, of which this can be a support, this can be a resistance, this can be a resistance, and it can be a support as well. As the market is breaking out of this structure, it shows you a momentum of it going up. But how are you going to know whether to buy it or to sell it? This is just a simple technique of it. But now, this is what the real market is going to do. The real market is going to be going up and coming down, and going up and coming down, and going up and coming down. This part is very simplified. I was talking about the step and ladder here. This is the same thing that we are doing here. But now the market is giving you a higher high and a lower low. A higher high and then a lower low. A higher high and a lower low. Now the market is here. What are we going to do? Now the market is here, Lord. What are we going to do?
No, I think it's okay.
Don't think your answer is correct. You will be buying the market. Yeah, correct. You will. But I want you to bear in mind, Gucci, at the same time, there might be fair value gaps somewhere. Fair value gaps. Those are the things that you need to put in your mind each and every time. I need to see a fair value gap first before I take this thing. Because following this trend, trust you me, It can give you profit, but how long is it going to give you profit? And how perfect can it be? Those are my most important questions. How perfect can it be? Because you see, it's very perfect here. It came and retested it here and go up. It came and broke out of the structure. A retail trader will say, now it's a schedule of pattern. I'm waiting for it to come in. Immediately the market comes back here. He's going to be selling. No, but the market is still going to continue to go up. Those are
the favorite, okay.
Exactly. Like you want that word that says gap. You have to understand what the market has to come back and close that gap. And there's another trick way of the market leaving the gap for you to think it's going to come back to it, but it's not going to come back to it. And I'm going to show you how is it going to do it. So this is the market pattern that is happening. You are 100% correct. You are going to be buying the market here because it repeated the same pattern. It did the same here. After retesting here, it went up, broke the structure. After breaking the structure, this is a retest, going up. After breaking the structure, now the market came down here. What are you going to be doing here? You're going to be buying it because the trend is going where? It's going up. That is what you're going to be doing. And remember, this doesn't take seconds to happen. The market will always give you time. The market will always give you time. And there is this thing that they call a fear of missing out. FOMO. If you have not taken any trade but you're on the market, don't regret. I'm telling you. If you have not taken any trade and you're on the market, don't regret. Because you haven't lost anything.
Yeah.
But don't think about it now because the market is here. If you are supposed to enter here, your strategy says you enter here, as you said. Your strategy says I'm going to enter my positions here. But now you see the market here. Your strategy was left way back, and let me write no. Discipline. Discipline. The market is not dying. Even tomorrow, the market is going to be here. It is still going to present the same opportunity for you. It's not like maybe presented time when it's still tomorrow, it's still going to see the same thing. It's a matter of growing every time. We are growing every time. We are growing. Okay, from here, this is where I'm going. From here, this is where I'm going. So now, we move to do you understand this pattern?
Yeah. Okay.
We move to a different pattern. Yamazi kusho kumoro. Ama kusho kumoro.
Okay.
Maybe igama ila.
Mhlome ngenyawo. Mhlome ngezandla I mean. Okay. Okay. We have this reversal pattern we call a head and shoulder.
Okay.
A head and shoulder pattern. Khuluma ngomuntu. This is the head, this is the shoulder. If I'm taking food, where is the food going? Is it going up or is it going down? If I'm eating, I'm swallowing food. Where is the food going? The food is going down. So you cannot expect you're going to make profit out of a head and shoulder pattern, then you decide to go die. This is the head and shoulder. Now I'm going to be buying. How? Because everything you eat goes down to your system. So I can go into an example this is a head, this is a shoulder. Whatever he eats, it goes down to the system. So in a head and shoulder pattern, you cannot expect to buy the market, sell it. Because the market is swallowing. It's a head and shoulder. Like that's the most simplest example I can make about a head and shoulder. If it happens that in the market you come across a head and shoulder, swallow it, sell. If you see, like most traders, trust me, most traders, they have this thing which, okay, fine, I know how to trade. I know I hate someone who's going to say so and so doesn't like. I respect everything that is on the market. If the robot works for you, it works for you. It doesn't work for me. That doesn't mean I have to criticize it. If I'm a head and shoulder putting they work for me and then they don't work for you, which means you don't know how do they work. So don't criticize them because when you fail to use a head and shoulder. There are a lot of traders, but they trade differently. So when I meet different traders almost every day. Hey, I trade like this doesn't work. It's fine, my brother, it doesn't work for you, it works for me. You don't understand it. That's how you should just put it. You don't understand it. You don't get it right every time you're using it. But I know how to use it. Yeah, when it comes to me, I'm one person who always sticks to my technical analysis. I love trading on the naked market. I will date in my chart. I want to from little because I know how to use my tools. And there's a point where I'm ill-disciplined. And I will take the trade and only to find out the market is going to respect my analysis very properly, 100%. Because I know and I have a confidence in what I'm doing. I failed so many times before I mastered it. It's not a night thing with overnight. I failed, but I told myself, I tried trading systems, I tried trading indicators. There's only one thing I never believed in, a robot. I've never tested a robot. I've seen people who are trading with robots, but trust me, I always tell you, that robot is not going to last you because the market evolves every day, and the market needs a human brain. But if you go to a robot, a traffic light, that's a robot. It's programmed to open blue after 5 minutes and open red after 5 minutes. It's programmed like that. You can never change it. How can the trading robot be programmed and see if now the market is evolving or what? I know now if the market is doing this is what I'm going to do. And the very sad part of it, trading deals with your money. So how can you trust a robot with your money? I know we are living in a world where we fastly moving to a fourth industrial revolution, where everything is robotized, if I can put it that way. Yeah. But with trading, you can replace any job with robots, but you'll never replace trading. Never. Trust me, I've met people who are trading with robots. That robot can work for 1 month, 2 months. After that, the market will evolve. It will blow your money. And the sad part of it, if that robot blows your money, you left with nothing in your mind. Because you don't know the reason why that robot put those trades there at that certain point. But if it's me, I took a loss. I know the reason why I took this loss. Now, I'm depending on something that is trading on its own. I don't even know where did it take those analyses. I don't even know why it bought, why it sold. But now, because now I understand the market patterns, if I see a head and shoulder, I know I will sell. And if my head and shoulder fails, I will go back to the market and analyze what is it that I missed, which means that head and shoulder was not proper. Because the market won't give you a very accurate head and shoulder. You can find a head and shoulder crump, so they will. Okay, this is how the head and shoulder pattern works.
So it's possible to have head and shoulder.
It's possible. It's possible. It's possible. This is a head and shoulder. This is a left shoulder. This is a head. This is a right shoulder. This is what, Junior?
It's green. Green supports resistance.
Let me leave you. But from the court. This is a neckline. A neck. This is a neckline. This is a neckline. How are you going to be trading a head and shoulder? You're going to be taking the selling positions, but how accurate you need to be in order for you to trade these head and shoulders? Same thing. Wherever I go with my fair value gaps. This is the first thing I look for. I look for a fair value gap somewhere here. There will be a fair value gap. The market will be breaking out of this track and coming back to retest. Trust me, I know it. I'm talking from experience. Immediately the market comes down. It gives you as a retail trader a profit here. Because they know you're going to place your positions here and your stop loss below. Or here, your stop loss, in order for you to be protected. But I will say to you, what's the protected high, the protective low, or the protective high of this low? Which is this one? The protective high of this low is this one. This is a protective high of this low. What does that mean? That means whatever the market can do, it can never come back to this price.
Okay.
The only thing the market can do, it will come back to this fair value gap. And you see, you will be confident, but the market will be coming back to this fair value gap before continues to the down direction. I'm still repeating it again. There is that shadow that you saw there, where it was showing something like this, and separating lines like this. This is where the price is very expensive, but I can buy it. This is where the price is very cheap, where I am buying it. So immediately the market comes here, now I know what I'm expecting to buy. But immediately the market comes here, I'm buying it. I'm selling it, sorry. I'm selling it to go on a down direction. This is how I trade a head and shoulder. I'm going to show you how to spot a fair value gap. Do you understand it?
Yeah.
Do you understand it?
I understand.
Now we have an inverse head and shoulder. How do you trade an inverse head and shoulder? Do you remember the first time I asked you about inverse head and shoulder? It's an opposite of this. It's like this one. Now inverse head and shoulder is like this. But it still performs the same way. So which means if I see head and shoulder like this, what must happen? I'm expecting to sell the market. If I see an inverse head and shoulder like this, what am I expecting? I'm expecting to buy the market. Simple like that. But now, I don't want you guys to stick with this thing, with this stigma of saying, if I see such a pattern like this, I must buy. If I see such a pattern like this, I must sell. Wait for your confirmation. Wait for the price to come to you. Yes, here's the pattern, but trust you me, the market is very vast. The market is very vast, trust you me. You can see a head and shoulder pattern, and you will sell the market, and the market will come and take your stop loss before it takes your direction. And you know how sad is that thing? Now you are left with those imaginations. I could be making this much. like I'm serious. Yeah. Like I'm serious. Now you'll believe it. At some point, when it came to a point where I was trading without a stop loss, and the market used to wipe everything from me. You know, Buffer, you know it, but you didn't understand it. But the market will wipe everything. Before wiping everything, just after wiping everything, it will go to my direction. It will shit. And you know what I'll do? I had a smaller account. Let me fund more. And you know, the problem is not with the problem is with me. It's not with the smaller account and the bigger account. No, I can. You know what? I can deposit 200 and still take the same thing. When I will deposit 5,000 and still lose, still in the same petty. It's a matter of discipline.
Yeah.
It's just a matter of discipline. If you can be disciplined, even if you can master discipline with Forex market trading, you will be done. Discipline. Discipline, patience. Patience, but I developed. You saw those trades where I was making my 50,000 and I've never reached that stage while I was trading each and every time. Placing 20 trades a day, you will never make it. Trust me, placing 20 trades a day, you will never make it. You know how I got there? I was trading only twice in a day. Twice. I will trade in the morning, I will trade in the afternoon, and leave the market and go play FIFA. That's what I was doing. And there I was making money, trust me. There I was making money. Take a trade about it's trading. If you are talking about a trading, guys, you need to make sure you don't leave the psychology aside. These things, they mean nothing if you don't master your psychology. They mean nothing, trust me. If you don't master your psychology, these things, they are nothing. Because you can know my head and shoulders, you can know all the patterns, but if your psychology is dead, you'll be seeing, okay, fine, now the market is creating your head and shoulder. Just because now you think you know better, you saw this left shoulder, now you see the head. Now you see the market, let me sell it because now it's going to create your head and shoulder, so it won't jump. You sell the market here, the market comes back here, it rejects, it wipes all your account before it goes to direction. It's not what you are dumb, you are not dumb, your directions are right, but the problem, you are lacking patience and discipline. You're lacking patience and discipline. So let's continue to invest head and shoulder. Invest head and shoulder. Don't draw like before you invest head and shoulder.
Correcting.
It's your first time doing this. Whether you are right or wrong, but at the end of the day, you are right. Just try and invest head and shoulder. Just think of a person. When you see this thing, just think of a person. Umuntu. Ikhanda lakhe namahlombe akhe. Remember, akekho umuntu onekhanda elihambe namahlombe. Akekho umuntu onehlombe edlula ikhanda. You just have to remember that.
Left shoulder, right shoulder. Is correct for preliminary.
Let me correct you. You will get there. Let me correct you. Inverse head and shoulder, it's an opposite of head and shoulder.
Oh yeah.
So now the one to stay, but low or inverse. Segamen is you understand? So I'm not this is the left shoulder. This is a neckline. Maybe you should start by drawing a neckline.
Yeah.
This is the head. Obviously, the head is above the shoulder. Then goes down to the neckline. Then what? The shoulder again. I will still explain the same thing again.
Yeah.
How are you going to identify your areas to place your position? I said the first thing that should come into your mind. It's a liquidity in the fair value gap. Exactly. If you can master those things, there is nothing that excites me than losing a trade and losing in place. Because that's where my mind gets to be more open. Because now I have the confidence to hold something that I've not placed. And I will have more confidence to place something that I've placed based on my previous experience. So now what must happen here? I must be looking for buying opportunities. But now how am I going to know where to buy? Because I'm telling you, trust me, everyone knows the market patterns. And the majority of them, they will tell you, your head and shoulders, they don't work. These market patterns, they don't know how to utilize them.
It's possible now to in a break like Google is already tested if you get in a break.
It's possible.
So the moment you feel like neckline, my feel like favorite cap.
Listen, I'll tell you something. I said to you the market is very vast. I'll tell you something. I like your question. Now you remember what you. Now we are focusing on the current price.
Yeah, on the current.
This is the current price. This is the higher. This is the higher high. This is the lower low. Okay. Now the market is coming here. I said to you we have something we call candlesticks. We're going to go to the candlestick language. The candlestick, like a candlestick, they don't just form J out of the blue. You need to understand the in-depth of it. How do they form? In such patterns like this, how do we identify whether the market is going to buy or is going to sell? If ever that inverse head and shoulder is going to be respected or not. Because it's possible that the market can create a head and shoulder and in a respect. Trust me, how are you going to know that? Because like most traders just this is head and shoulder. I will tell you, that head and shoulder is not valid. The reason why. Immediately I see the price. Now this is a high. This is the market is coming to create a high again. So now because people have seen the head and shoulder, they are expecting the market to break. It's fine, you're not wrong, you're correct, but are you confirming that now the market is breaking? How are you going to confirm that? Immediately the candlestick, the highest candlestick close above the previous high. Trust me, I know. We can open the market now. And immediately the last candlestick closes above the previous high. That head and shoulder is now going to be respected. But
not
a tail. I'm saying the candlestick closes above.
Okay, above. Okay. Oh,
if the candlestick close, you remember what the candlesticks open when and closes where it. If I'm not talking about the weeks, because the market can come and give you a week here and come back here, it closes below. Trust me, ask me that head and shoulder is invalid.
It's invalid because
the price has not shown a potential of going to the upper direction. That head and shoulder is invalid. Because now we are talking about this neckline. The market, how many times has the market respected this neckline? 1, 2, 3. So now we are expecting the price to break the neckline. How are you going to confirm that the price is breaking that neckline? Just wait for the candlestick to close above it. Now you can see what, okay, fine, this is where. Now you must wait for the markets either to come and close the fair value gap or to collect the liquidity here before going to the upper direction. But already before the structure is being created, you know, hey, this is what I'm waiting for. That's why you see us crazy every time we open our chart. Not we open our chart because we have other positions that we are open. No, we go to the chart because we want to see if our price is being respected. If the market comes to our price, our target, it's fine. That's why we're going to be placing our position. Trust me, I'm going to walk from here to Monday, not just because I don't have money to request or to give it things, but because I'm late.
Yeah.
And I know to fear I'm late. The market will be somewhere up there. But now someone will age. So now if you build that confidence, you're gonna immediately I want to respect the market price. I wonder if you can respect the market price. Secondly, respect your own analysis. Now there's nothing exasonal njengomuntu ofike abeke umthetho aqeda ahlule You cannot tell me what you are failing to respect your own strategy. Who else needs to respect that besides you? No one else, only you. But now, in such cases like this, we are still going to have Ama-patterns afana nalawa. A double top. Trust me, there is a trader you're going to meet tomorrow is going to tell you double top does not work. No, you don't know how to trade it. I will tell you, no, it's not what double top does not work. You don't know how to use double top. I was once at the point where I was like, hey, these patterns, they don't know. These patterns, they work. But the problem, it came to that point. I did not have a mentor. I have to tell you the truth. I did not have a mentor to tell you, hey, Baba, this is how you can see this thing. Now, this is how you do not. Like 99% of the things I had to figure it out. I had to figure them out myself. But now, a double top. This is where the market is coming back down. Yeah. Now it's coming up. What are you going to do? You are going to be drawing your trend, your horizontal line, or your demand here. What is in your mind? Immediately the market gets here. Immediately the market gets here, what are you going to do? Because remember I said the history in the market, the history repeats itself. Immediately the price comes here, the price was here before. Now it came here. What are you going to do? What are you going to do? No. Okay. You are both wrong. You are both wrong. Explain.
Okay. Uti, it was like this one. This
is my all-time high. This is my first top.
Okay.
Now the market price is here. Who I'm going to sell? When I'm going to buy.
Yeah.
And the reason why you said I'm going to buy because I'm going to sell, and I said it's wrong. Why you want to buy? Because now the market has reached the resistance. Why are you going to buy?
Okay, since we're coming at double top, okay, it double top now familiar now with the
market is creating a double top because the market price is here now.
Okay.
What are you going to do?
Uzo sell.
Okay, but yeah, let me give you my answer.
Okay.
You are both correct, but this is the part you need to understand. You are both correct. You said you're going to sell. You said you're going to sell.
Yeah.
Meaning I'm going to wait.
Okay, well, apply discipline.
Meaning I'm going to wait, and ask me what am I going to wait for?
Yeah.
Either I'm going to wait. This is what I'm going to wait for. I'm going to wait for the last candlestick here. If that candlestick, because remember that candlestick can give me AMA wicks here. Immediately I see the price closes below this previous high, I'm going to sell it. But immediately I see the price closes below, above I'm going to be waiting for the price to fake this thing out.
Yeah.
And do you understand it?
Yeah, I understand.
Okay. Wait. Don't just because this is the reason why people will say, double tops, they don't work. No, they do work. You apply them in the wrong way. They do work. You apply them in the wrong way. Because this is what people they teach us. If you see the market comes to an all-time high, a double top, you sell it. I sell it, then it rejects the price, it buys. Why do I need to sell if I need to sell here? Just put this thing in your mind. Just instill it in your mind. Wait for the last candlestick. The last candlestick is going to show you the direction of the market. If the last candlestick closes below the previous high, that market is going down, trust me. Because the market isn't showing you any potential of going up. But if the last candlestick closes above the previous high, obviously I'm going to buy.
Okay, let's say candlestick is so let's say if they promoted but the candlestick is busy.
Where did the candlestick close?
Yeah.
Where did the candlestick close?
It closed up, but it's heading up.
Did it close below or above?
It closed maybe below that.
No, don't say maybe. Where did it close?
It closed there.
Below.
Yeah, below. But it is low.
That's a sell. Remember, I said to you, the candlestick can give you weights, but the main part, where is the main price?
Okay.
Where is the main price? Where did the last candlestick close? It closed where? Below, which means I'm looking for selling positions. If the candlestick if this candlestick was like this is the week.
Yeah.
If this candlestick was, trust me, I'm going to buy the market and blame me if I'm wrong. I will be making money. Do you see it? This is the candlestick. But if the candlestick was like this, this is a week. If the candlestick was like this, I'm going to sell this market. I don't care whether this candlestick is a bullish candlestick or is a bearish candlestick, but as long as it closes below the previous high, I'm going to be selling that market. You understand the guy I'm saying? Because even if we open the market, this is the same thing that we're going to be seeing. That's the same thing that we're going to be seeing. What is it that you need to understand? The market structure goes hand in hand with the market price. Where did the price close? It closed below. What must I do?
Obviously.
Obvious, that's a sign. But if it's like this, it closes above. What must I do?
That's it, buy.
It shows me a very, like, sometimes people will be surprised. See, why are you buying the price if they are very high? Because I've seen the last candlestick showing me a potential of the market going up. And sometimes without me analyzing, I just see the previous price and the current price. Okay, now if the current price does not exceed the previous price in terms of the candlestick closing below, why? If it closes below, I sell it. Without even analyzing it. Without even putting on my tools, or maybe putting a horizontal line. That's it. But because I see what it is, what is happening. Now I go for my target. That's where my wallet is. I'm waiting for any question. Same thing as you find out. Same thing as in it double what? Double bottom. Okay. Double. Double bottom.
Or the opposite, yeah.
It's an opposite of this thing. It's an opposite of this thing. The price came here and came back here. What are you going to do if the price comes here? What are you going to do? This is the current market price. What are you going to do? Exactly. What are you going to do?
Wait.
You will have to wait. Because into esibulalayo sithi ama-market pattern awasebenzi. Immediately you see the price come back to this horizontal line and you say, why are you selling it? Because it got to the resistance line. But what more confirmed that the price is going to change? You have no confirmation. You have no idea of what you're doing. Zero idea of what you're doing. Zero. Is it clear?
Yeah, it's
No, yes, right.
What pattern am I giving? I will call out the time. Okay. Then we have market patterns that we call trading patterns. Ne?
okay.
Trading patterns. Trading patterns. We have a trend that is going up like this. Now you come across a market, a mover like this. How are you going to know whether to buy or to sell? You wait for the market to break the structure and come and retest it. Remember, I'm still telling you about it. But again, another thing I will tell you about the fair value gap. If ever you see a fair value gap below, and the market has reached the high, there is a possibility that that price might not come to that fair value gap, but we're going to cover that. Because you don't want to miss out Kuma position that you can see which you can make profit. You wait for the market to come here and retest the end and continue with the ride. But bear in mind of the fair value gap. But if the market has changed the price already, don't think that market will come for that fair value gap.
So it's possible to market in my boy for the fair value gap.
It's possible.
Basically, we approach it
I'm going to tell you how to approach it. Remember now, the market is changing the structure.
Okay.
So as the market is changing the structure, what's the potential of this market to go back here? Because now the market will be coming back here, which means this whole formation will be invalid. So bear in mind, if the fair value gap is below and the price is going up, the market will come and close the fair value gap before going to the upper trend. But if the structure has changed, just forget about that fair value gap. But that doesn't mean that you have to ignore it even in future, because if the market want to come and take the prices from there, it will come. But don't be fooled by a market creating a breakout in a reversal pattern. Because the market is reversing, there is no way it will go back there. The price is reversing back. It cannot go back there again. Do you get me? Yeah, that one I'll make it clear on the chart. Okay, this is a breakout. That's a breakout. These are the market patterns. This is an uptrend. Still there's a downtrend. There's a downtrend. Okay. How are you going to do it? You are going to wait for the breakout and the retest. The market will go up, but trust you me, this is where now possibly you can see a fair value gap in the market. Then the market will come and take out the orders in the liquidity before going to the other direction. Do you get it?
Yeah, that's it.
Okay.
So unakuza ni uptrend. Ngibona ama-fair value gap kakhulu. Then you are in between this line. Then the wire in between those lines.
If a value gap buffer can be anywhere.
Anyway,
If a value gap can be anywhere, and if a value gap is there to indicate whether the price is going to come back or not. Remember, if a value gap can occur in any price, but now if the market has changed the structure and left the fair value gap below or above, it's impossible for it to come back again. But if you see a fair value gap and the market is going on an uptrend, it's best you don't ride that market because it will take you out. It will come back to that fair value gap. And if it comes back to that fair value gap, where are you? You are in a negative. You are on a negative, on a bad negative. Where is your stop loss? There's one thing that I like here. If I trade, I rather place my positions where I think my stop loss can be. Can I repeat that? I rather place my positions where I think my stop loss should be.
No, there are more quantity stop loss.
And you still remember what stop loss here?
yeah.
Stop loss. I'm going to okay, fine. This is where, if the market comes in, this is where I'm going to place my stop loss. Why do you think the market will come to a stop loss? There's one thing I'll tell you. People are very confident about this going to stop loss. People are very confident about the stop loss. Yeah, this is your place. You are very confident about your loss. But you're not confident about your positions. So why aren't you placing your positions where you think of placing your stop loss? It's a matter of discipline. You don't want to wait for the market to come to that stop loss and make it your position. Remember, I said to you, you rather place a buy stop or a sell stop instead of losing unnecessary position, guys. Like that. Like when I'm the part, I'm very serious. Like you rather place a stop, a buy limit or a sell limit. Because sometimes you end up losing the number. And like, trust me, like placing a stop loss and looking at the market coming to your stop loss. Hey. And after taking you out of that stop loss, the market goes to a direction. How does it make sense? I prefer if the market takes stop loss some. Let it take my stop loss and go straight to the opposite direction. I would be here, trust me. I would be, after the market will come back to my stop loss after taking my stop loss and go to my direction. I prefer the market will take my stop loss and continue to the. It shows me what was wrong. Other than what if you can kick it out and say, hey, Baba, you were right, but this is So here's my concern again. I'm saying rather place your positions where you're thinking of placing your stop loss. Before I say anything about it. Anything?
I'm uncovered.
This is what we're going to chat. And much what we're going to chat. These are all the things that I want us to see. Like the one that's going is wrong.